Welcome to the StockMentor.com studios. I am your stock mentor, Brian Johnson. Moved down today in the markets. NASDAQ took it the hardest today. Actually, quite a wide spread between the three indices. NASDAQ down just over 1%, S&P down about 0.7%, and the Dow down 0.4%. So not near as far as what we saw in the NASDAQ itself. Individual stocks, there were some that were playable today, but as for the indices, more chop, just more consolidation here, kind of a consolidated pullback, really is what we're seeing here. Didn't break any of the more major levels that we discussed for entries until late in the day once again. So that seems to be the MO lately here, where a lot of the bigger levels of support and resistance get broke, but they don't get broke until about the last hour or so of the day. That's kind of what we saw here. We started to get the dive down below 10,500, and once we did, we dipped down only about 40 points on the Dow before pulling back up, trying to recover that 10,500 mark. You can see how important that is to the market. So, choppy trading, kind of difficult trading from that aspect. On a daily, though, look how it held beautifully here. So from the 60-minute, you saw the break of 10,500 coming right back into about 10,450-ish, where it then found this heavier support line. Well, it should be support anyway, and it was, and did work today. So tested and held today. That remains until we break this level, still a bullish sign. For the more conservative traders, you're really still looking for a break below 10,400 on the Dow and or 10,600 for your breaks, for your entries. So long above here, short below there, short below here, looking at this blue line obviously for your next bigger line of support. NASDAQ on a 60 took it a little bit harder, but you can see nothing broken here. This is still one of the larger areas, about 1860, on the NDX, 1860. Still a larger area of support. We didn't even test it today. Breaks below that 1860-ish would probably get us now below the 50-period moving average and take us back, I think, pretty close to this 1840, 1845-ish area. That's about where that blue line will be by the time it gets back, and that is ultimately the bigger line you want to be watching on the NASDAQ if you like to short the NDX. From a daily, you can see that'll also coincide with right around this area here, still making for a pretty decent trade to the downside, but just not convinced it's going to be anything major at this point until we start seeing obviously breaks of these areas here. Lots of support down in this area, especially 1850, then this 1835 area for the more major breaks. At this point, it just wasn't a ton of necessarily volume at all until right up until about the end of the day. Then we started to get some real action on the volume side of things, but nothing that really tore the market apart by any means. The bears are just slowly letting this thing wander back to the downside, and in that respect, we still have to treat it as a pullback. On a weekly standpoint, still fighting with the blue line and the green 20-week. Now we are 3 days into it and haven't seen much of a move at all from a weekly standpoint. SPX on a 60 was down as well, 7.71 points, getting back below the 20, but still in kind of this very cautious, the no-fly zone for me was about 11.13 or so to about 11.25. We did get caught up in that yesterday as it gapped up into that area and then ran all the way back down and continued to run down today. But my more conservative entry was really below 1100, which we really never tested. So once again, nothing really to trade from an indice standpoint. Looking at it from a daily, you can see both the line on the 60 and the line on the daily are still holding fine, right at or around that 1100 area. You really want to wait for a break above 1125 to get long, or back below about 1100 to get short. And even if we do below 1100, you're still looking at some support coming in with the 50. This might get broke at the same time. This might be up to about 1100 by the time this thing gets down, but I'd be watching that. 1090 then, and then about 1085-ish, 1080, 1085-ish or so below that. So there are support areas below us here on the SPX, down about, once we break 1100, about every 10 points or so. That the market's going to have to chew its way through. The bear markets have been strong, and typically, when it starts to accelerate to the downside, it doesn't care. Support means nothing to the bears when it really starts to get rolling. And the bigger picture is this blue line down here. If and when we get back down here, we'll be watching this one very, very closely. SPX on a daily here. Once again, you can see it pulling back into this line at 1100. And on the weekly, not really moving anywhere. Still trapped below the 20 and above the 50-week moving averages. Couple days left. Let's see if that makes any difference coming into the end of the week. Now, once again, a move up in the VIX. So, confirming what we saw in the markets. Move down in the markets, move up in the VIX. So, little bit of fear returning, but guys, overall, I mean, you do like to see this as a confirmation, but overall, the VIX still wandering sideways in the bigger scheme of things. The daily makes it look like we are actually seeing some movement here. Candles down, candles back up, holding on to that 200. But looking at the weekly, it's just putting in just a doji candle here. I can't even look at that as a potential reversal candle. I mean, I guess it could be, but at this point, it's anybody's guess. We still have 2 days left, and the VIX can do anything before that. But notice how it's just holding in this mess, and I do mean mess of support and resistance right in through this area. Overall, not a lot of fear pouring into the markets at this point. Even though we were up today, still doesn't show a lot of fear back into the markets. This is just a normal, everyday move for the VIX. Apple here, great move up, great move down. So you can still see the indecision by the Apple owners here. Moving it up, moving it down. We saw this break yesterday, which made for a great long, and then today it just fell apart. It moved down almost, the entire day, coming right back into these areas we had been watching. Notice this move up before earnings, gap up and then straight down, consolidation, and now kind of still sideways choppy action on Apple. For those of you that are investors of Apple and are in for the long term, you haven't done very well necessarily since the end of April. Basically break even on that trade. For those of you that have been day trading it, there have been opportunities to make a little bit of money, but right now is really not the time to be looking at any swing trades. Day trades, though, yes, there are opportunities here for day trading Apple, just because it moves so much during the course of a day. Just got to be very careful. As you can see, we're still choppy to the sideways, to the side here. All right, 20 week. Have I talked enough about that? Do you guys not know where we're at here? I think you do. We broke this blue line, came right back to find support at the 20. Base, holding it and still holding it even into today. This is still the line to be watching. You want to take careful note of that. This is just nothing, though, but a huge consolidation sideways. At the top of a move, my bias would be for a break to the upside, but it's anyone's guess until it happens. So be careful with your trading. Don't let your bias influence what you do in your trading. FAS on a 60-minute move up, pull back, and continue to pull back today. Not really giving you much to trade at all if you're an FAS/FAZ player. Simply coming back into the 50-day moving average, which was exactly where I said yesterday would be a good short if it got back and below this area. Of course, did not see it. This is just a real easy laid-back pullback at this point. You'll want to continue to watch that level into tomorrow. Same thing with the FAZ. We did not break up and over this 14 area. We got to 1403. Did not have any kind of a hard break up and over 14. That is still an entry for me on a day trading side. Up to about 14.50, then above that 15. So we're about every 50 cents we're looking at overhead resistance there. But you got to wait for a break of that $14 mark. Otherwise, back below 13 for a short. So as you can see from yesterday, big move down. Here we had the move up yesterday, move up today, but only slowly pulling itself back into overhead resistance. So very tricky on FAS and FAZ. Continue to stay with your day trading with those. Those are by far the best way to play them right now. I still have to look at this as just a possible pullback for the time being until we can get back up into these more major areas here before any real panic, I think, sets in with the financials. But back above 14, I think back to 14.50 is a pretty good trade. And if you can make 50 cents on these type of trades, a lot of times that is not a bad day's wages. Okay, that'll do it for today, guys. Just another consolidation / pullback day here. I still have to remain neutral to bullish on the markets because that's what the charts are telling me. I will wait for breaks of these more major levels before I start looking to take my entries, long or short. On either, I like to trade the SPX, so for myself, it's really, back below about 1100 and or above 1125. We'll sit around and wait. If I can't find good trades here, I'll look to my individual stocks for opportunities. But until that happens, just keep waiting for these breaks. All right, people are going to make this out to be a big inverse head and shoulders, and I don't know where they get it. I don't think it's pretty at all, but whatever. Just wait for breaks up and over these areas before you go long, or breaks below here to go short. And we'll be back with you again, as always, tomorrow.